Welcome back to PIEX Data Break. The topic of today is what does data tell us about the previous downturns in the R market? PIEX Data Break is an informal 10-minute conversation among key R market experts covering current R market trends. My name is Matteo Pace and I'm part of the research team at PIEX. For today's exciting topic, I'm delighted to be joined by Christie, founder and CEO of PIEX, board member of PIEM, who brings us more than 20 years of experience in the R market. In 2014, Christine founded PIEX in London with the goal to bring innovative financial and analytical tools to the final market. Then I'm extending the welcome to Paolo Turati, who's a professor and economist based in Turin, Italy, with many years of senior experience in the art and financial world. Paolo coordinates the art operations and events for Fidarti's family office and is in charge of the Executive Wealth Management course at Turin University in Italy. But so, let's join the question of the day. Christine, please enlighten us with data.
Thank you, Matteo. So, what does data tell us about previous downturn in the art market? Let's start by looking at what kind of data can we use to look at downturn and growth period in the art market. Anyone who starts to get involved with the trade of art, either as buying or selling art, has to make a very important decision at the beginning. Should they buy or sell through private transaction, or should they use public auctions? These two channels definitely have a very different profile, as private transactions are arranged by art dealers, art advisors, or actually even auction houses. The terms and prices are negotiated in private between the parties, and there is no information about the transaction that is published or reported anywhere. On the other side, public auctions are arranged by an auctioneer, inviting a large public to participate, actually as large a public as possible. The terms are clearly stated and the price is set up in front of a live or online audience, and the details of the transaction are published officially on the auction house's website. So it is obvious that the channel that brings the most data about the art market is really the public auction channel. And that's really this channel that one can use to identify the downturn and upturn of the art market. For the PIEX Auction Market Index, we combine all this data into an index that clearly shows over the years the downturn and the upturn. Here, so for example, on this graph, you can see months after months from January 2008 until August 2020, you can see the combined revenue on the y-axis for the three leading auction houses, Christie's, Sotheby's, and Phillips. And obviously, looking at this, you can very clearly identify a downturn in 2008-2009, which had the shape of a U. It looks like a U because actually after a period of sales going down, it reached the bottom around November 2009 and stayed for quite some time at the bottom, creating this shape of a U. And then the market recovered and went back up to a certain plateau in November 2011 and then continued its growth until June 2015. Then came another downturn after June 2015. And this time it had the shape of a V. And again, you can see here that in February 2017, the downturn reached its bottom, but contrarily to 2008-2009, when it stayed for some time at the bottom, it recovered pretty rapidly and went back up until September 2018. Now, recently, you can see that since September 2018, the market has been slowly going down. And then there was an acceleration on March 2020, obviously brought in by the confinement period and the cancellation of most of the live sales as the auction rooms had to close. The revenue fell until the end of June 2020, when after the July sale, the various auctions and high-profile auctions that were arranged, the total revenue increased, and that's why you can see this recovery period as of August 2020. So what's going to happen in the future? Well, we could see two potential scenarios for recovery. The first scenario is that, as in 2017, after reaching the bottom in June 2020, the market would continue its growth in the fall and that would give us a V-shaped recovery. Alternatively, we could see the market going down at some point and then a later recovery, which would give us a W-shaped recovery. So when looking at what's happening at this time at PIX, we believe that the market is going to go up for a few more months and that September will be strong and October will be strong. And then we probably will have in November another downturn a little bit that will create a W-shaped recovery.
Thank you very much for this insightful comment. And now, Paolo, which is your analysis on the topic?
I agree with Christine about the possible scenarios, and I vote for the W option because I am afraid that in November the market will be very, very weak. The difference between this crisis and the crisis of 2009 is important because in that time prices drop the half of their value, while at the moment we can't see a drop in the medium level of the prices. And this is a good thing for the recovery of the market. Let me say some words about the crisis in the last century. Let's start in 1926, where it started the big speculation of the stock market, and the boom was registered even in the art market. You know that MoMA was founded in 1929, just before the stock exchange crash. The collapse of Wall Street caused the correlated fall of the art market, and there is a decrease of prices from 60 to 80%, but overall the decline is our prices is lower than the one of the stock market, and the recovery was a U recovery, very, very long, until 1940. But let's go to 1950, where it starts another boom. Between 1954 and 1961, there is a great increase of the art market, especially in the US. But in 1962, there is a collapse of Wall Street nearby the murder of JFK. You know, I was a boy there, but I remember that it was a tragedy for all the world. And there was a decrease that until 1967, for 5 years, even there were a recovery. Then we can see a U recovery. In 1970 and 1973, there was the energy crisis with stagflation, and until 1980, there was not a recovery. Then another U recovery during 7 years. Then we go to 1982, 1981. After a couple of years of increase, there is a fall and then a reprise of the market until 1988. And so we have a W recovery in the only W recovery in that situation. After, in 1990, we have a decline of the prices of 20–30%, and until 2000, the recovery was not completed. And then the other one is story. In 2007, 2008, we have the great increase and then the great crash.
So the W recovery would not be the first. There's been one in the past.
Just one against 4 U recovery.
4 U, yeah. And then that means also the V recovery in 2016 was the first one.
Yes.
So to wrap up and summarize, public auctions are the best place to find transparent and ongoing monthly data in the market. And then there is a lot of value, as we saw with Paolo, in learning from the past. The market has indeed experienced many previous downturns followed by recovery periods. Now, by studying the past, we can hope to better understand the present and build scenarios for the futures, as we are doing right now in this video. For today, it's all, but join us soon on another PIX data break with another topic on the R market. I very much look forward to seeing you soon on another PIX data break.